All right, guys, back to work. Welcome back. Hope you guys had a fantastic day. Boy, market's been range bound most of the day today. Get some big earnings reports coming tomorrow. We made that big move higher last week and then into those sideways ranges the past 24, 48 hours. Anytime you see those directional ranges like this, there are three really easy ways to make money. And of course, I have a number of trades I'm tracking for tomorrow. I'm going to give you my favorite trades in the video tonight. I want to make sure you guys have a roadmap to make money no matter what happens tomorrow after those big earnings come out tomorrow morning. And before we jump in and talk about my favorite trades here for tomorrow, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you like the lessons, if you enjoy these videos, do me a favor tonight, will you? Hit that like button for me. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting the channel. Let's go find some more winning trades tomorrow. Wednesday coming at us hot. We got earnings tomorrow morning, and look at these beautiful directional ranges we have right now on the Nasdaq and the S&P. Big move up into a trading range. Big move up into a trading range. If you are in my trade room every morning, we call these directional ranges, and directional ranges give us three really simple ways to make money. I'm going to cover all three of those tonight, and one of them is my favorite, and one of them might surprise you as well. So we're going to go into a lot more detail on that in a moment. Now, before we dive into the tick charts and talk about entry tactics on those three different scenarios for tomorrow, let's double check our schedule for tomorrow, because there's a couple things you want to keep on your radar. Now, first of all, tomorrow morning, we had Netflix earnings came out a few moments ago here this evening. But tomorrow morning, we got a big number coming out. ASML is a very large semiconductor manufacturer. The race for AI is on, and we're watching closely to see if ASML sparks some volatility tomorrow morning. That is a very big wild card. I don't think anybody knows how the market will react to these big corporate earnings. I don't know how the market will react to it, but I do know I'll be watching that tomorrow morning and see how the market reacts. We'll integrate that with the three game plans we talk about here tonight. And then later on in the morning tomorrow, we got 9:45. We got PMI composite flash. Anytime we have PMI numbers, you always want to pay attention. So 9:45, a great time, by the way, for a news event. We find a lot of good trades between 10 o'clock and 10:30 every morning in our trade room. So be aware of the earnings in the pre-market tomorrow. That's a very big wild card, big question mark. And again, 9:45. I would definitely make sure you're at your desk between 9:45 and 11 o'clock tomorrow morning in our trade room. Now that we know our schedule for tomorrow, or at least when the news is, let's get back to our charts here, because as always, the money is made on the charts. Let's now go over my favorite trades here for tomorrow. We'll get the S&P and the SPY going first, and we'll finish up tonight on the Nasdaq and the triple Qs. As I mentioned a few moments ago, this is a very common scenario and a very pretty easy scenario to trade. A big move up into a trading range. Again, we call these directional ranges, and there are three ways to trade them. Let's talk about those three ways, and we're going to go over those three scenarios that you guys have a game plan no matter what happens after those earnings come out tomorrow morning. The first way to trade a directional range is a breakout pullback. Now, breakout pullbacks are very simple in theory. There's a lot of ways in which we can trade them. We can trade on the way up, short on the way down, buy the pullback, buy the retest. There's a lot of ways you can trade a breakout pullback. I'm going to give you guys my favorite entry techniques on that tonight. Now, the second way to trade a directional range is a fake-out breakout. Fake-out breakout. We are way, way high up right now. I don't think anybody would be surprised if we saw a big bull trap up there. Now, we'll talk about how to trade the fake-out breakout. This is my favorite scenario for tomorrow. I could easily see a fake-out breakout high and then into a bear trap down below that low. Man, oh man, if there is a trading god looking down on me tonight, this is what I want for tomorrow. And again, there are ways to short it. There are ways to buy it. There's a very lucrative scenario we'll talk about on that for tomorrow. And of course, the third scenario is that bear trap. If you're taking my free video classes, we talk a lot about this pattern: strong move, shallow pullback, higher high in price, traps, baby, right? That is where a bear trap could be. And that, of course, is the third scenario we'll talk about for tomorrow. Also, another one of my favorites after a big move higher as well. So as you can see, buyers have all of the momentum right now. There are 3 different ways I'm watching to trade this for tomorrow. Let's now dive into some tick charts because I don't trade off a 60-minute time frame in our trade room. This is a 7,000 tick chart you'll notice in the upper left-hand corner. And if you're watching for the first time right now, that yellow line right there, that is the 21 EMA. You'll notice this is that big move up into that trading range, and we now are watching for those 3 specific scenarios. Now, we're going to go over each one of those right now because I want to make sure that you guys, and myself included, I want to make sure we visualize the game plan before we get to trade tomorrow morning. The first one is that breakout pullback we'll talk about. The second one, my favorite, is that fake out breakout, right? And of course, the third one is that bear trap, that higher high in price and that trap below that low. Let's go into this now in a lot more detail. That way you are ready, that we're both ready to make some money tomorrow. Now, when it comes to a breakout pullback, you want to think about 2 very simple patterns. One are traps, and the other is what I call a failure pattern. If you're taking my free video classes, these should make sense. These should ring a bell for you. If you're watching for the first time right now, we'll talk about more about that here in a moment. If we do get that run higher, if the market rips higher, and again, we've got big news coming tomorrow. This could easily happen. All-time highs are still well above 5,000 on the S&P 500. Plenty of space to make the run to all-time highs. If we do run higher, rip higher, watch out for a shallow pullback, a higher high in price, and a bear trap, a trap entry on the way higher. Now, usually what happens is these will complete a measured move. The breakout leg is the measuring leg. We don't know exactly where that will be just yet, but if it really jumps, right, on news or whatever it is, that strong leg higher will typically be the breakout leg. We'll pin it off that low. We'll grab that bear trap below that low and look for that measured move target. Now, once we get that measured move, once we end up all the way up, now we don't want to buy high anymore. We don't want to chase this thing, do we? No. Now we do is we flip this resistance into support. We start using what was resistance as key support now, and we now wait for the pullback. The pullback on this will almost always go underneath the moving average, and once we start to get off these prior areas of resistance, now can be used as support. What I'll do is I'm going to trap those bears in under the moving average, get them to sell short, and then use my failure pattern to buy right into those stop losses, okay? Now remember, if I have no crystal ball for this, right? So I'm not gonna pick that bottom right here. For all I know, it'll run up and wham, right back down again, right? We'll talk about that in a moment. I have a game plan for that in a moment. But if we hold off that high, right? If we hold off that prior high and the bears get short on this, now you know exactly where their stops are. And they can use their stops to fuel the move now back up to retest that high. And then also too, I like to use these ABCDs. I call them measured moves in our video classes. One leg right there, and I'll use that measured move, my target up overhead. All right, that is the breakout pullback. And again, later on in the video tonight, we'll talk about if it does roll over, because again, that is probably one of the most lucrative potential trades here for tomorrow. The final one is we call a pop and grind. Now, every once in a while, news will come out, the market will pop up and begin grinding and grinding and grinding. You know what I mean? Pop up and start grinding higher like that. We call these pop and grinds. They're very, very easy to trade. It's simple. Simply mark a trend line off that high, anchor it down around these big lows, and my secret is always look left, find prior swings, right? Like swing lows like that. Again, if I could line that up around those prior highs as well, even better. But the point is if we pop up and start grinding higher, I'm going to try to get a pullback off that channel. And then there are usually 2 types of entry patterns you look for. One is we call that bear trap entry, which is right below a prior swing around the low of a channel, right? Pop and grind channel. The second one is a failure pattern. We just talked about that. The bears will try to short this thing going lower, and once they try to short and they get stopped out, I'm going to try to use their stops to fuel that move going higher. I can grab a failure into a pullback combination, and again, think about that retest of that high being a nice, easy target. So the final one here, right? The final one, if it pops up and starts grinding higher, draw that trend line off those highs, bring it down off that low, and really any of the entry patterns you guys are learning in the free video course, right? It could be a trap, it could be a failure, a pullback combination. If we have enough space up there, possibly a strength trade before we go back up and retest the high. Those are 3 ways I'm looking to trade that breakout pullback. Now, let's take a breath for a second. Let's slow down for a second, because I know most of you guys watching right now have learned all these setups. I know because you guys send me such great emails and P&L screenshots. I love seeing you guys make money with this. But if you're watching for the first time right now, if you're new here, this might be a brand new language for you. None of this stuff might make sense. Not to worry though. I cover all the entry patterns, and I have hundreds of examples of pop and grinds, breakout pullbacks, traps, failures, a lot of examples of these in my free video classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab a little pop-up that came up there and take that free trading course, because the strategy I teach in that video series will show you a simple trick we use in our members trade room every morning to know exactly where the best winning trades will be that day. More importantly though, that video class will teach you 4 of my favorite entry patterns: traps, failures, all the setups we use every morning to find lots of winning trades. If you're not making consistent money right now, it's probably not your fault. You're just going to need a better strategy. If you're missing the best trades, if you're struggling to qualify for a funded account at Top Step or Apex, hit that link up there. Take that free course. That will give you an easy roadmap to find lots of winners like we do every morning in our trade room. Perfect for someone to make the jump into full-time trading. And also, too, if you can't grab the links up top there, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links, of course. We trade together every morning in our trade room at 8 o'clock Eastern time. I'll put my trade room links down there for you as well. I'm also on Twitter a lot during the day. If you're on Twitter, give me a follow. I'll put the links down there for you in the description there as well. So that's so you can get more information on everything I'm talking about here for tonight. Now, let's talk about what I would love to happen for tomorrow, and that, of course, is the fake-out breakout. We are way, way high up right now on the chart. You know, anything's possible tomorrow with big earnings. You know, this time of the year, anything is possible, but this is a very good scenario of where a fake-out breakout is certainly a little bit more odds of success than in normal situations, because we're so high up with that range underneath us. Now, if I want to sell a top on this, what's my problem? There's always a problem, right? There's always a problem. There's 2 problems: location and momentum. Okay, before you take your next trade, you want to ask yourself, which one of these is the problem? If you don't know the problem, you're ignorant to what the problem is. There's always a problem. Right now, if I want to sell short up here, what's the problem? It's not location. Location's fantastic. It's a great place to sell short. It's resistance after a big move higher with a range. It's a great location for a short. Problem is momentum. Momentum's a big problem. It's all bullish right now. So I got a good location for it, but a bad momentum. I need to basically trap buyers in who are buying high right now. This is a horrible spot to be a buyer. Unless we see it rip up and start to give us those bear traps, right? I don't want to buy up here. So if I start seeing buyers come in and try to buy high like this, if they try once, go lower, try twice, I want to get that bull trap right off that high. This is what we call a crown reversal pattern. Again, off the highs, off that measured move I had listed above before we started here on the lesson tonight. All right. Now, again, if they pop up and start grinding, no, right? No, right? If they pop up, pull back, and go higher, careful, right? It's probably going to be that bear trap, okay, going higher. But if they pop this sucker up and they start pulling back here, and the buyers start struggling. They try once to keep it going higher. They try once to keep going higher. They pull it back. Buyers are going to buy more in a bull market as it goes lower. Buyers buy low. They're going to buy more as it goes lower. Give them now a second try. They try twice. And you better believe there'll be a lot of bears up here looking for that bull trap. That bull trap. I call these crown reversals, my way of calling them, because the reversals off of that high. All right. Now remember, if this thing reverses off the high like this, targets are going to be where? Back into that range, back around those lows, and to leave that runner for that pendulum swing back in the opposite direction. If you're taking my free video course right now, we talk a lot about ranges and how we use pendulum swings. The amount we go above the range is the amount below the range. That's why this fake out breakout could be so lucrative, because it could easily dump and roll all the way back down. And then later on in the video, we'll talk about it, pick it up and buy it right back up again. Could easily be a good 1-2 punch tomorrow morning in our trade room. Now, we don't get the perfect crown reversal pattern sometimes, right? It's a lower low in price and a bull trap above that high, right? That is a very specific pattern. A lot of times we get a V-top reversal or the old pop and grind reversal. For example, we might see some news come out overnight or tomorrow morning's earnings reports. We may run up and then slam right back down, and there's no way to really catch that top. Right? It's not a breakout pullback. It's not a bear trap going higher. And it's certainly not a crown reversal. So it just V-tops off that high. What do you do in that case? Here's what you do. You watch as it rolls back. It will almost always roll and grind back down like that, right? After it V-tops. Once it does that, find that trend line off the low, pin it up around the highs, and again, look left, find those swings, and this is 99% of the time, this is where we're going to find the best entry right off the top of a channel and just a little bit above a prior swing. This would be a good example of a bull trap, right? A bull trap, of course, according to our rules in the video course, but it could be a bull trap. It could get above the moving average. Buyers try, fail, back down again. Any of the entry patterns can be applied off of that high. All right. So again, that would also be a case of a fake out breakout. Think about how much it goes up, project that back down. Now we know ultimately where the market wants to go. Take some profit off at the other side of those swings. Leave that runner back for that pendulum swing back in the opposite direction. Right? That's how you trade that fake out breakout. But promise me, if this thing starts to punch and grind going higher, please don't try picking a top on this market. We do not decide when the market's overbought. Follow that trend, that breakout pullback a little bit earlier, or if it goes up 1, 2, bull trap, crown reversal, or V-top into that grinder going down. Man, I love a trade like that. That's always something I look for there for tomorrow. Now the big question is, how do we buy it down here? Right? How do we buy down here? Let's now move this to the Nasdaq. The Nasdaq, of course, is feeling lonely over there right now. Haven't looked at the Nasdaq here yet. Let's talk about that final third scenario now on the Nasdaq. Nasdaq, of course, is very, very similar to the S&P. One big difference on the Nasdaq is we are staring down the barrel of those all-time highs here on the NQ. Big move up into a trading range. Again, I call these directional ranges. 3 ways to make money. Breakout pullbacks. We talked about fake out breakouts. We talked about, and of course, one of the easiest ways, especially with those all-time highs up there, right, is basically a bear trap with that higher high in price and that trap below that low. Just think about how many buyers are going to be waiting underneath that low if we end up going to a higher high in price. I can only imagine a wall of buyers waiting below that 17,409 half. Remember, the key though is they got to get that higher high though first, right? That higher high first. Let's now go to the Nasdaq tick chart. This, of course, is a 4,000 tick chart. You'll see there listed in the upper left-hand corner. Now, the Nasdaq seems to be in a great place right now for that fake-out breakout, right? We got major resistance overhead. There's that trading range down below us. Come on, right? You could easily see this running up into measured move, into overhead resistance, and all of a sudden now those buyers are struggling. 1, 2, remember, as it pulls back, right? 1 try for the buyers, 2 try for the buyers, lower low in price, right? Lower low in price, and that bull trap off that high. Man, oh man, that would be a great trade. Again, that's that crown reversal to short off that high, or V-top, right? V-top pops in, grinds. We know ranges act like magnets. We know ranges love to rotate. So the amount we go above, the amount we go below. This could get very good for the short-term sellers. Mark that low, mark that high, look left, find that swing, and don't miss that first test off the high of that channel. That is a gorgeous, gorgeous trade off that low as well. Okay, so now we find our way back down around these lows, right? Now we find our way, we're all the way back down now. Let's go over the scenario now where we fake out, breakout high, we slam lower, right? We slam lower. And again, we might be shorting that. We may not get it. We have to wait and see what we can get for the market here for tomorrow. How do I buy down here? How is my location? Location's great, right? This is a perfect place to be a buyer. What's not so great, though, is momentum. Now, I realize we are in overall bull market right now, but I'm a day trader, all right? I'm not a swing trader. I'm a day trader. So for me, I need to respect the short-term momentum. If you're getting bounced out of good trades before they go to your targets, it's probably because you're going too aggressive against the short-term momentum. I like the idea of buying down here, but whenever I see a very strong move in one direction, what do we always talk about? Anytime we see a strong move in one direction, we expect a two-legged pullback and a retest of that low. Then we oftentimes get that big run back up again. Okay, so this is what we have to protect against. So to do that, if we get this run going lower, and by the way, how would you short this going lower? If we did end up rolling over, how would you short it? The best way to short this is to sell bull traps on that move lower. So if it does roll over and run lower, you want to keep on looking for those, again, those bull traps, okay? Again, it would be great off the high of a channel, all right, something like that. But that's the pattern you want to look for to short this stuff right now. We talked about this one last night. Move down, higher, right, that pop up, that lower low, right? Those types of bull traps. It's no wonder everyone wanted that short. That's all that is. It's a lower low in price and a trap above that high. So as we're going lower, you want to look for those bull traps as we're going. Back to our plan though. If we make our way all the way down, our concern is we're going to pop up and retest that low. The bottom line is there will probably be sellers waiting at these prior areas of resistance, right? They'll try to hold this thing and run this back to retest that low. To avoid those sellers, okay, to avoid a bull trap on this, I need to buy as low as I can. So watch closely. Trap those bears in. Let them try once. Let them try twice, and I want a bear trap right underneath that low. This is a great example of how we can buy low and pick those bottoms, right? We're not picking the bottom. We're waiting for the pullback to the moving average, and as we get those bears coming in, trying once, trying twice, higher high in price, and a bear trap. I need that bear trap. I have to buy as low as I can in that scenario because, again, the underbelly of that range, there's a very good chance they're going to hold that underbelly and go back to retest that low again. All right. If they don't, fantastic. Right. If they don't, that's great. I will definitely take some profit off at the underbelly of that range, and I will try to leave that runner, right, for that rotation back up into that trading range. Again, I would expect a lot of buyers are interested in that area right now, but I have to respect that short-term momentum. Now, what happens a lot of times is it will come back and retest this low, right? It'll go back and retest low. We do a lot of these in our trade room where we'll grab the crown reversal, we'll grab grab the bear trap, right, off support below the range. We'll grab that bear trap. We'll take some profit, right? But then what happens is the bears come in, whack it back down again, and now we get that double bottom retest. Now, I know you guys love this pattern. If you're watching for the first time, this is oftentimes the most lucrative setup, because now what happens is now all the experienced traders, the big money traders who sold short right there, they now take their profit at these lows. So now all this is rookies down here selling. Once those rookies get short twice now, that two-try failure pattern earlier, use their stops to fuel this move, right? Use those stops to fuel that move going higher. Take some profit back off at the retest of that high and leave that runner for that big run. This double bottom retest is oftentimes the most lucrative, because again, when I get that big, if we get that fake out breakout and it rips lower, it's going to try to retest that low. And so during that initial move down, I'm trying to buy as low as I possibly can with that bear trap. Again, if I'm lucky, it'll just rip right back up again, right? No harm at all. However, a lot of times though, about 40% of the time, it'll hold that underbelly. We'll get our 1-to-1 easily, okay? But then what happens is they rip it back down, they retest that low, and now we've got an area where the experienced traders are short already. They're buying their way out of their positions, and now in come the rookies, right? Remember, I'm not going to pick the bottom right there. We're not picking that bottom. It may keep going. I don't know, right? It may go a bit further than that, may go a bit lower like that, right? I don't know. All I know is once they retest that low, now professionals get out of their shorts, and now we can rope in those rookies once, twice, grab that failure. And the trade I always look for here is that failure into that trap on the way back up where? On the way back up to take out that high right there, right? That high right there. Makes sense? Okay. So again, it's a bear trap entry to buy low. And I know I'm repeating myself, but I know this is complicated. So I want to make sure I do it a couple times, because repetition is the knife that hones, or the stone that hones the knife of success, right? If I can mess it up a little more there, right? Profit off there. If they retest the low, trap those bears in again, right? Now they've retested. They're supposed to retest. Right? They're supposed to retest. Let them retest, trap them in the rookies, and as we're going higher, right, it's that bear trap, right, for that run back up. Again, these oftentimes just squeeze, and they can make your entire week's worth of profit, month's worth of profit in one afternoon. All right, guys? Love that trade, right? If we're lucky, we'll get both sides. The bull trap at the top, the bear traps at the bottom. That would be a dream come true here for tomorrow. The only other variation of this is we may end up jackknifing off of that low, popping up and V-bottoming. Again, these are not my favorite, but I don't control anything. All I control is my own choices and trades, right? I don't control the market. I would imagine a lot of buyers waiting down there. If it boing, right, V-bottoms off that low, it will take almost every ounce of restraint. If you're anything like I am, you are going to be frustrated watching this thing go without you. Promise me one thing, you're not going to chase this thing going higher, because your patience will get rewarded. Draw that trailing off the highs, bring it down off that low, and what do we always say? Look left, find prior swings, and first test is the best test. Again, this could be a trap entry. It could be a failure pattern, a pullback combo, a strength trade. These are perfect situations for a strength trade, because it can snap and rotate all the way back up outside of that trading range. All right. So again, now my favorite trade for tomorrow, I would rather get this thing to go lower, right? Trap in the bears and buy it up right there. But again, I don't know what we're going to get. Nobody does. And I want to make sure I'm ready for this game plan. That way tomorrow, all we do is just trade the plan. It's so much easier than coming out and saying, okay, what are we going to do today? Now the game plan is all set. Hopefully this wasn't too complicated. I try to keep these as simple as I can. But remember, right, tomorrow morning, we're going to trade this stuff together in our trade room, 8 o'clock Eastern time. I can't think of any better way to learn to trade than to come out, trade along with me, ask a million questions, find a bunch of winning trades, have some fun together. We have a lot of fun together. A lot of people making money with us in our morning trade room. I'll put all the important links, as always, in the description of the video down bottom. The free class links for sure. Start there, learn the basic strategy there, and then soon enough, hopefully I'll be seeing you sometime soon, trading with us in the morning trade room, and also to put my Twitter feed in there as well, and I'll see you on Twitter. All right, guys? Hope you learned a bunch here tonight. Hope you use this knowledge to make a killing tomorrow during earnings season, and as always, we'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, same time, same place back tomorrow night. We got more big earnings this week, and we are just getting warmed up here in the month of January. Guys and gals, my name is Joseph. Thanks for watching all the way to the end. Be well. Be nice to each other out there. Let's make some money tomorrow. Adios, amigos. Bye-bye for now.